Hey everyone, welcome back to Chip Stock Investor. Just have a quick earnings update for you. Third quarter earnings are underway. Let's talk about ASML Holding, ticker symbol ASML. That's the Dutch company that makes EUV lithography equipment or extreme ultraviolet lithography. Remember, Moore's law is slowly dying, but EUV equipment can help keep those transistors shrinking down smaller in the coming decades, which makes chips more powerful, more energy efficient. ASML is the only company that makes EUV equipment at this point. Closest thing you'll find to a monopoly in the tech business. However, there has been a ton of worry about ASML and again, the whole semiconductor space because of the US's new restrictions on exports to China. Not just chips, but also advanced equipment that is used to make advanced chips. ASML, when they reported their earnings, though, said everything is going to be fine. They see minimal impact through 2023 from these new rules. Why is that the case? Simply put, the US and the Netherlands already put those restrictions on ASML earlier this year. They're already complying with the rules. This stock has already been clobbered because of that impact, the lowered sales guidance this year from reduced sales to China of their EUV equipment. So let's talk about some numbers from Q3. ASML said their revenue was 5.8 billion euros in the third quarter. That's an 11.5% year over year increase. Not bad, but better than they had anticipated. They had previously said between 5.1 and 5.4 billion euros. They also had a 51.8% gross profit margin on the machinery that they did sell, compared to 51.7% a year ago. And again, this also beat their guidance for 49 to 50% gross margin. So all around, solid quarter for ASML. Some of this beat on their expectations was due to some of the machinery that they were sitting on, waiting to be shipped to customers. They launched this new plan where they're able to actually ship the equipment, install it at their customer's fab, let the customer handle the initial testing of the equipment. Some of that equipment got tested, the customer accepted it, ASML got to realize some extra revenue. Net income in the third quarter was 1.7 billion euros, basically flat compared to last year, represented just over 29% net profit margin. The company also said that they repurchased 1 billion euros worth of stock as part of their share repurchase plan. So if you're keeping track, based on ASML's current market cap, that works out to an annualized 2.1% of their market cap. If you're looking for like a dividend yield type of equivalent, that's in addition to the current dividend yield of 1.3%. And now for guidance. Only one quarter left to go in fiscal 2022. ASML reiterated their full year guidance. They said they expect about 21.1 billion euros in total revenue for the year, gross margin to be about 50%. Revenue would be up 13% compared to 2021. Again, lower than what the company had initially expected, but again, they got hit with those restrictions to China early on, so that dragged down their growth overall this year. The company is going to hold an investor day on November 11th. They're going to give some updates to their long-term business strategy, possibly an update to the share repurchase program. Stay tuned for that. That's going to be a really important event to keep track of. Currently, the stock trades for about 27 times earnings, about 17 to 18 trailing 12-month free cash flow. Not exactly a cheap stock, but next year could be a big rebound year. Again, they're going to start lapping the restrictions they had on selling equipment to China. Some of the legislation that has kicked in, like here in the US, the US CHIPS Act, also some governmental support in Europe to help expand chip manufacturing, might help offset some of those loss of sales to China. For EUV lithography equipment and the related deep ultraviolet or DUV lithography equipment that ASML manufactures. This is an industry that's going to grow about 15 to 20% on average per year for the next 3 to 5 years. But I think ASML's profit margins on average will increase faster than that. A share repurchase program should help profitability per share on a per share basis grow a little bit over 20%. Taking a look at this company's stock card, you can see it's been absolutely obliterated this year, down at one point more than half from its all-time high. I think this thing's oversold. The market is anticipating some sort of recession that impacts sales next year. Again, a lot of paranoia out there about the US-China trade war heating back up and what that means for companies like ASML. But I think a lot of these events are now priced in. Again, I don't think shares are cheap, but given this company's really strong and steady growth for the next few years and all of the funding that's going to go towards supporting localizing chip manufacturing, I think this plays right into the hand of a company like ASML. Again, this company is the only one that makes EUV lithography equipment. This is big, tough to make, tough to develop stuff. An EUV lithography machine costs somewhere in the ballpark of $200 million a pop. This company is not going to have a lot of competition on this front, I don't think, for a long time. I see the stock doubling over the next 3 to 5 years. I'm in accumulation mode right now myself. I'll probably add to it on a monthly or so basis until I build up to a 2 to 3% position of my total overall portfolio. But I want this to be one of my top chip stock holdings in the coming quarters. Thanks again for joining today. If you found this video helpful in your research on ASML, remember to hit the bell so you don't miss a video. Subscribe. Earnings season is coming. We're going to ramp up our coverage of chip stocks and other related companies this earnings season. See you all again soon.